Namaskara, hearty welcome to Jnanarjane, Empowering Excellence. Friends, today's Wednesday study circle, we have arranged a very interesting and very important topic, revised code of ethics. Revised code of ethics, we really fortunate to have an expert on the topic, and he's passionate about this code of ethics and various other issues. So he's none other than CA Ankit Maheswari from Jaipur. On behalf of Bangalore branch and on behalf of all the participants here, hearty welcome to CA Ankit. Hearty welcome. Members, this revised code of ethics has been made applicable from 1st July 2020, and it has been divided into three parts. So in fact, it's three volumes. The volume 1 talks about it has been derived from the International Ethics Standard Board for Accountants, Code of Ethics 2018, issued by the International Federation of Accountants, that is IFAC. The volume 2, it is based on the Chartered Accountants Act 1949, based on domestic provisions governing the Chartered Accountants. This complements the volume 1 and makes a complete reading. About volume 3, this is a case law referencer and incorporates all the decided published case laws of both the schedule till 1st April 2019. Friends, due to COVID, some of the volume 1 issues deferred till further notification. That notification not yet come. The issues involved are really complicated. I think there are a lot of issues, particularly to responding to non-compliance of laws and regulations, fees, relative size, taxation services to audit clients. These are all important code of ethics yet to notify. So they may notify anytime. Maybe the new council may take up these issues. So we have many questions. Maybe the members, particularly the newly started practitioners, they have, these are all the queries. Definitely our Ankit is going to answer all these things, whether one can charge lower fees than the previous auditor charged, whether auditor can accept a gift and hospitality from audit clients, whether loans or guarantee of a loan with the audit client. So business or any personal relationship is allowed with the audit client, all that and many more. Maybe the answer he will provide in his the course of this today's study circle. With this note, once again, hearty welcome to each and of you members. You are the reason for this study circle, Wednesday study circle. Week after week, we organize because your overwhelming interest to join and participate in this study circle. That once again, hearty welcome to each one of you. Over to Divya.
Thank you, Chairman. A very pleasant good evening to all the participants of today's program, and also special welcome to our speaker of today's program. To give a brief introduction about Mr. Ankit, is currently Secretary of Jaipur branch of ICI. He was also nominated President of the Youth Wing of Rajasthan Tax Consultant Association. He is an experienced chartered accountant with over 15 years of work across geographies, having expertise in risk-based internal audits and indirect taxes. He is also managing partner of Ankit Maheswari and Associates Chartered Accountant, which is a leading firm of Jaipur. With this very brief introduction, I wholeheartedly welcome you for today's program, sir.
Just a minute, Ankit. Just for the information of members, the clause by clause analysis of Union Budget 2022 is going to happen on Friday, 11th February. It's a full day program. It is available both on physical and virtual mode. I request please visit bangaloreici.org and register for that. It is available both physical and virtual. It is a full day on 11th February, Friday. With that note, once again, please visit Bangalore ICI for all our upcoming programs. Thank you. Over to Ankit.
Thank you so much, sir and ma'am. I am fortunate to address Bangalore branch for the second time, and it's been a year since we hold our first session, and from there till date, to be honest to all the participants, there are not much changes which we have been encountered, but ethics are something which we have to take day in day out, and we have to really imbibe them. It is just not about studying ethics or knowing ethics. It is about imbibing ethics. And if in case you want, if you really intend to imbibe it, you have to study it, in a repeated fashion. So, first of all, I hope all the participants who have joined this program virtually are in best of health and spirits. And my sincere thanks to CA BT Shetty Saab, chairman of the Bangalore branch, along with Divya Madam, who is the secretary, and CA Srinivasu ji, who is the vice chairman of the Bangalore branch, for coordinating this seamlessly and giving me this privilege to come back to Bangalore and address on the same topic again. Thank you very much. Uh, I'll straight away, come on the topic. We will cover the major areas, the questions which your chairman has just raised were very, very important questions, and we keep on studying those questions, whether, a minimum fee, a fee which is less than the predecessor auditor fees can be charged or not, whether a chartered accountant can give a guarantee of a loan or not. All these questions have been covering up, but this session will obviously deal with these questions, but we will also deal with, we'll understand in a very phased way what is the quality review mechanism of ICI, what is the disciplinary mechanism of ICI. Because to understand any topic, it is important that we understand the structural framework also. Then we go on with this new code of ethics, the 3 volumes which Chetty Saab was talking about. I will definitely cover those 3 volumes while we discuss what is the structure of the revised code of ethics. Thereafter, I think we can go on the schedules and the recent pronouncements and the major distinguishment between the previous code of ethics, which was, revised in 2009, and this code of ethics. So we will study what are the basic differences and how are they impacting our professional practice day in, day out. And have we, as chartered accountants, have we taken that impact in our life or not? While this revision has taken place, have we geared up, have we prepared our practice in that fashion or not? I think we will discuss all those minor issues. Uh, I'll straight away, share my presentation. There's a very brief presentation. We don't want to go too theoretical into it. That's for sure. We want to. I would want to take your questions. Please put up your questions in the chat box, and I would want to answer those questions before we wind up the session. So let's make it more interactive. A virtual session always have this challenge of interactivity. So it's a humble request to all my participants who have joined here that please be interactive. Make sure you put up your questions. We have uh, a limited audience, so I think we can almost cover every aspect with respect to the revised code of ethics. So allow me to please share my presentation. So is it like you have to make me host or something like that?
No, I think he's allowed you to share, no? Share is there right side after video.
While I'm sharing, so it comes allow WebEx to share the content, grant access in
Suraj?
system preferences.
Hello, Suraj.
Sir,
Yeah, please help him.
I will call, sir.
Yeah.
So I've opened my system preferences.
Suraj, our ITT man will call you now. He's able to answer your
Okay.
query.
Sorry for the interruption. We'll take a minute.
For the information of members, and the indirect tax union budget analysis is going to happen on 17th of February. It's a half-day program, 4 hours of learning from evening 3 p.m. to 7 p.m. I request you to register that too. So direct tax is on 11th February, indirect tax on 17th. And also the new team of ICI is going to take over on 21st of February, Monday 21st. I request all of you to come to branch. There is a session also in the evening, 3 hours, Companies Act, new amendments and all is there. CA MP Vijay Kumar and CA Gururaj Acharya is going to participate. So both are coming to Bangalore, and I request you to register for that program too.
Yes, please give me that access to share.
Yes, it is coming now.
Shetty Saab was also telling that with this revised code of ethics, do you think we are more burdened or it's more like an opportunity? How do we see it? Let's try to figure that out. But before we figure that has been happening in last 10-15 years in the framework in which we are working. For example, if I recall, say there's a transition from accounting standards to Ind AS, then there's a transition from customs, excise, service tax to GST. When we see a decade, then there's a transition of the Companies Act 1956 to the new Companies Act 2013, and you see almost all the framework which was there have been really replaced. And one thing which you commonly see in this replacement is that as a chartered accountant, we are moving towards uh, more global practice. And while what Shetty Saab was very aptly telling that being a member of IFAC, following the international ethical, being a member of international ethical standard board, it is that we move towards global practices. This code of ethics is an effort towards these global practices only, and that is why you see that this transition gives. I really look it like that this transition really gives us an opportunity to become a global practitioners. Maybe if we were serving our clients locally, all these laws, applicable laws, the changes in applicable laws, and following these ethics gives us an opportunity only to make our practice strengthened, only to make sure that the systems in our practicing firms are in place, to make sure that we follow the ethics at parlance with the international players, international firms, international chartered accountancy firms. And that is why I really feel that it is more like an opportunity rather than it is more like a burden. So take it like that. That would be my suggestion. Before we formally begin with this session, I want to place in front of you. I want that as of now we are with the and this number is in our institute is majorly initiated on the on the call of other person. It is not like institute is still not in a position to suo moto initiate disciplinary cases. Majority of the cases are initiated while there is a complainant. So my point is that 2000 cases are a very huge number considering that. While if we consider that there will be 1,50,000 chartered accountants practicing in this country, so there are 1% of those who are under the radar of the disciplinary committee. So that I really feel that this number you should know, and institute is becoming very proactive in terms of regulating uh, regulating the profession. So there's a lot of pressure from NAFRA also. That is one thing which we have to understand. And with this pressure, I'm sure in times to come, as a regulator, institute
Your
will become more
network is
stringent,
little, I think
more
bandwidth is little low. Maybe you switch off the video and speak. There's some
okay.
disturbance, it's
Let me
not
try.
clear. Yeah.
Okay.
Or you have the Wi-Fi there?
Yes, there's a Wi-Fi, and the speed is relatively fine. I'm
Okay,
just
then go
figuring
ahead.
out.
Go ahead. Maybe sometimes it happens.
Okay. In case the disturbance persists, maybe I'll
Yeah, yeah.
switch off my video.
I'll inform. Okay, please go ahead.
Right. So with NAFRA coming up, I was saying there's a lot of pressure on institute as a regulator. Also, you see, a lot of changes coming up. Second thing, while we discuss about code of ethics, uh, I was hearing one of our past presidents, who is himself a stalwart in code of ethics, regarding regarding how do he see profession. So probably our profession now stands on two major pillars. One is professional competence, and other is code of ethics. And I sense if one of the pillar, or if one of the pillar, be it professional competence or be it code of ethics, if one of the pillar is fractured, you will see that our profession is trembling. And if both the pillars are fractured, then you see a professional who will be crawling. So we have to take care of both the things hands in hand. That is the professional competence as well as these code of ethics. Because in today's era, the young CAs coming up, a lot of young chartered accountants put up a lot of marketing effort, uh, lot of effort in soliciting clients. I have seen this change over a period of time, that without giving a thought about the code of ethics, without giving a thought that how as society we will be judged, these things are happening. And while these things are happening, you sense that there is a lot of changes which institute needs to bring upon. So make sure that your practice is dependent on your professional competence, rather than it is depending on all these kind of efforts. That's one message which I wanted to communicate before we move ahead with this session. And also making sure that complying to the code of ethics becomes utmost important, to make sure that our image is restored as chartered accountants, in the eyes of public at large, in the eyes of government, in the eyes of regulator. That's what we have been discussing since our act came into place. And while if you see that image is slightly depleting, then I think it is just not because of the institute or institute managing committee members, council members, but a lot of onus lies on us only, to make sure that we enhance our image in times to come, for which I think there is a clear focus of institute on the idea of imparting code of ethics. That's what I feel. Uh, while we were starting this session, so I was telling Shetty Saab that I've been in Varanasi. Basically, I belong to Jaipur, and presently I am at Varanasi. And while I am at Varanasi, I have been auditing my clients remotely. And this opportunity has only come because of pandemic. Because with pandemic, the clients which were located virtually, the clients which were located virtually, uh, we have been auditing them, right? So the important thing which needs to be analyzed here is the audit risk, and while we are auditing our clients virtually, so that audit risk needs to be analyzed. And while this audit risk needs to be analyzed, we have to make sure that the kind of audit documentation we were doing it in pre-COVID era, and the kind of audit documentation we are doing it after COVID, the kind of audit evidences we used to have while we were doing this audit previously, the kind of audit evidences which we have right now. So there's a lot of change which has been happening, and we have to understand that we have to reassess our audit risk. I hope you recall the concept of audit risk, and that is one thing which we really need to make sure that we reassess our audit risk while we are auditing our clients virtually. Earlier, if you recall those days, we used to have the basic idea of, while we visit a client, our analytical procedure, our substantive procedures were there in place. Now this analytics is done through data mining, through technology. You get SAP dumps, you analyze those SAP dumps based on your analytic tools, and you derive an audit opinion based or asserts based on those analytics. So things have been transitioned. While things have been transitioned because of it, you have to make sure that you have to making that we are not one of those persons who come under the radar or under the ambit of any kind of a difficulty which our framework has been out of which our framework has been there. So that's another thing. Also, lastly, one thing which, while you are looking at the changes, I see the changes in the multi-purpose empanelment form. And while I look at multi-purpose empanelment form, you see in last 2 years, institute is seeking a lot of information. Uh, this information is in the form of ITF forms. This information is in the form of earlier we used to just put a firm's return. Now we put up a detailed ITR form with all kind of incomes which we are generating. So institute is trying to become very transparent, and while we file these multi-purpose empanelment forms, while we file these forms with PDC, a lot of information basically flows to the institute. And As I told you in the beginning of the session earlier, institute was looking at like if there's a complainant, then only institute will take an action. But with this information which we are filling suo moto to the institute, plus the UDINs which we are generating, these all changes just make me believe that there will be a lot of regulation coming up in times to come. And the idea of the session would be that only, that as a regulator, as a professional, we are geared up for such kind of challenges in times to come. So let's quickly begin up with the with this entire framework of code of ethics. I receive certain, I just look at those questions. Allow me a time, allow me a minute to visit the chat box.
You want to read, Mr. Ankit?
I'll just read the questions, right? I think there are
No,
certain things.
I'll read it. It will may help the audience also.
Sorry, because I'm being not very comfortable with WebEx. We use Zoom here, so probably that is one of the reason, right? So that we hands-on take these questions. Since we are not large number of audience, now I'm able to read these questions. So the first question comes from Vedyanathan G. Most of us have two COPs. I mean, as a chartered accountant and a registered valuer, many more are insolvency professionals. So a member is accountable to ICA, primarily organization, say IBI. As question, just wanted to understand how the interplay of regulations happen. For example, if there's a disciplinary proceedings with IBI, does it invite or some format proceedings by ICA, or vis-a-vis, say, a disciplinary proceedings by ICA should be reported to? So it's an interesting question. I'll just answer it, in the shortest way. While we qualify this examination and while we become the member of this institute, one thing is for sure that whether we hold COP or whether we do not hold any COP, we are being regulated by our institute. So in this case, where you are a registered valuer and you have been members to both the institute, and any proceedings happen in either of the institute, it will eventually there's a lot of possibility that if the complainant is strong enough, he will complain at both the levels. So as I told you in the beginning of the session only, sir, if as of now, if there's a complainant, then there's a possibility that either Institute of Chartered Accountants will also initiate any proceedings. Suo moto, these things are just not coming up as of now. As of now, there are not much cases in the cases which I have been dealing with. Right. The second question comes from Vishal Ji. The session is for students also. I don't think it is for students. I think it is for members only. Students, while they are in their CA final, they study these ethics. But as of now, this is a purposeful session for members itself. And from basics to the advanced level, I'll try to address all these issues. I take on the next slide. So importantly, while we were discussing, this question comes that these are two bodies which we see, the institute and some other body, while a registered valuers body, which somebody was asking. So basically, I'll go more detail into this through this slide itself. While the Charter of United Kingdom for chartered accountancy was laid down, since we have adopted that charter in at the institute also, the charter which was being laid down by Institute of Chartered Accountants of England and Wales. So we being a body, regulatory body, also adopted their charter. So I recall one case, and when I was studying audit few years back, then I realized that there was a particular example in which a person was traveling in a train without a valid ticket, and while he was caught, right, their mother institution initiated an action, and that person was a chartered accountant. So then the mother body initiated an action that a chartered accountant was traveling in a train without holding a valid ticket, and how critical it is for a community to have such kind of instances. So rather that mother institution, the institute held them guilty for in the clause of other misconduct, while there was nothing which was relatable to profession. So the idea was very clear from that instance only, that as chartered accountancy is not only about profession, it is a way of living, and that way of living, you might find that certain things are even lawfully correct but unethical, and all these things needs to be taken care while we grow our practice, while we run our practice, while we lead our lives. So that is why as professionals, my advice will be, irrespective whether you hold certificate of practice or not, irrespective whether you are a registered member to some other body, the moment you become a member to this institute, there's a lot of we carry a lot of image in the front of public at large. That would be my idea. So now let's go on. As I told you that to begin with, we will go on the quality review mechanism of the ICI, and we see that there are four important boards. One is the quality review board, the other is the financial reporting and review board, the third is the peer review board, and the fourth is the taxation audit quality review board. All these four boards uh, have to play some critical roles. I'll quickly discuss that. The quality review board was set up under section 28A of the Chartered Accountancy Act. The role which quality review board plays comes from the word quality only. It is the quality of audit, it is the quality of services, it is the quality of uh, deliverables a chartered accountant is offering is being governed by quality review board. Now, when it's a 10-member committee, it's a 10-member board, and when this board plays an active role. So as of now, with NAFRA coming up, this board only plays an active role while NAFRA communicates to institute regarding any kind of quality issues in audit with respect to a particular company. So institute suo moto will not initiate any audit or any checking based on the quality review board. But if NAFRA comes into picture and NAFRA says that, with respect to this company, we need to check the quality of the audit done by the chartered accountant, then the quality review board plays a very active role here. The second, uh, the second board is the Financial Reporting and Review Board. And while we talk about the Financial Reporting and Review Board, so this board talks about the auditing standards, the accounting standards, which is being issued by Accounting Standard Board or AASB, and the compliance to these auditing standards and accounting standard. It is basically a non-standing committee, and while it is majorly applicable to large enterprises in which public's interest is being vested. So all those listed entities whose equity and the debentures are listed on a stock exchange, the commercial banks, the government body, the large bodies whose turnover is more than 50 crores, all these things, these on all these companies, auditors of these companies, FRRB is there. And while again I'll say, while if SEBI or anybody comes up with any kind of an issue to the institute, then that action or initiative is taken by FRRB. For us, I still feel the most important board is a peer review board. And with peer review board, I sense that uh, uh, peer review board is now playing a lot of vital roles. I am telling you to all the young chartered accountants who are sitting here, because I am sure the experienced one knows this, that institute has been constantly pushing this thing, that if you are auditing of a listed company, if you want to do a statutory audit of a listed company, then it is mandatory to get yourself peer reviewed. So all those participants who have been here, I want to ask this question also: how many of you have been peer reviewed, and how many of you have been peer reviewed on your will? There are two things. One is that institute, takes you under the peer review and you get your peer review done. The other way is that you can also approach to the institute to get your peer review done. For those who do not, who has lack of knowledge regarding the peer review board, I just want to tell you one thing. As the name suggests, peer review, there are peer reviewers who are empaneled with the institute by clearing the exam of the peer review board, and you can get your firm uh, peer reviewed by your professional colleague itself, right? That colleague, while institute issues that kind of a letter, institute gives you an option also to select a peer reviewer. Out of 2 or 3 options, you can select that peer reviewer and you can get your firm peer reviewed. So the first important change which I see from here is very clear, that in times to come you will realize that firms who have been peer reviewed are the firms who have been eligible for the empanelments, are the firms who will be eligible for even the statutory bank audits. And in today's era also, even if you want to do audit of a listed company, it is mandatory for you to get peer review. So one takeaway which I want to tell you, that all those firms which have been in existence since last 4 or 5 years and uh, have now made up a practice or set up a practice. So to take that growth trajectory, it is important that you take your firm under peer review and get that initiation of peer review done. The last is the Taxation Audit and Quality Review Board. And in this, again, it's a non-standing committee of the institute, and the matter pertaining to, this is where when CBDT bodies like CBDT, bodies like Central Board of Indirect Taxes and Customs, your Reserve Bank of India, SEBI, IRDA, all these regulators approach institute as a regulator where they find there is a serious irregularity in any kind of a taxation, in any kind of a compliance of their own applicable laws. So making sure as the taxation audit, while you submit your form 3CD, while you submit your tax audit reports, if there's some irregularity in it, maybe CBDT might initiate an action through institute in that kind of a case. So make sure that even for RBI, we have been receiving a lot of cases in past where chartered accountants have been certifying projections, and lot of clarification also have been come on this, that chartered accountant cannot certify any kind of projected balance sheets or projected P&L accounts. In that case, RBI also have very well clarified that we don't expect banks to take such kind of certificates. So sometimes your client comes to you, pushes you for a certificate, you issue that certificate, and suddenly you realize that there is something coming from the regulator side, that becomes a problem. So my point is that as CAs we should be very clear about what all we can certify, which we will obviously discuss while we move ahead with this session, and what all we cannot. So we cannot has to be listed down that these are those things which can be certified, and make sure that do not have any empathetic view of the client, how good your client is, how deep your relationships are, what kind of fee structures are. As chartered accountants, we should make sure that we do not enter in the shoes of any uh, any client. That would be my humble suggestion on this point of view. So this is the quality assurance mechanism. I hope it's clear to all the members. Let's move ahead. So as I told you that these code of ethics have been revised recently, and it was applicable from 1st July 2020. Initially in the session only I told this point very clearly. I told this point very clearly that institute being a member of IFAC has issued the standards based on the International Ethical Standard Board, right, of accountants. Uh, most important thing, these code are revised. What is the difference I will discuss, but as of now what the chairman Mr. Shetty also said, that barring the major changes in the revised code of ethics are three changes which I see. One is no clar is non-compliance of other laws and regulation. We will study it in detail. Other is the fee restriction from a particular client, which was 40% and is now proposed to be 15%. And third is the tax. While we are providing any assurance auditing services to a client, with this new code of ethics, there's a restriction of providing the tax advisory services to these clients. So barring these three important changes, the revised code of ethics is enforced. And that is why I said that these three changes are those changes for which we have to gear up. Maybe they are not applicable today, but as what Mr. Shetty said, that in times to come, with the new council coming up on 12th February, you might see those changes being enforced really quick. And the point is that how much we are geared for the same, that is something. The idea of the session is that whatever the changes are, the bigger changes are yet to come, and this is an opportune time, this is an appropriate time to make sure that that your systems are developed enough to take those changes. I hope I'm able to convey my message very clearly. So now let us understand the disciplinary mechanism of the institute. And the disciplinary mechanism is, we have a disciplinary directorate, and we have board of discipline, we have disciplinary committee and an appellate authority. I'll straight away come on two important things. One is the appellate authority is common between all the three institutions, that is the Institute of Chartered Accountants of India, the Institute of Cost Accountants of India, and the Institute of Company Secretary of India. Our appellate authorities are common. The second point which I want to uh, raise here is that all those cases, right, which are being put up under a disciplinary committee have to be, the complainant has to file a formal complaint, and that formal complaint is filed in a triplicate copy. I am just telling you because how to file a complaint. Basically, my idea is to let you know. So you file it in a triplicate copy, preferably in English, and making sure there's a fee of 2,500 plus 18% GST while you file a complaint. So this is the mechanism of filing a complaint. Then your case might go to Board of Discipline or Disciplinary Committee based on under which schedule you are guilty. So this is the primary mechanism, and I am sure we all are aware about this mechanism. Under our disciplinary directorate, we have Board of Discipline, Disciplinary Committee, and besides that, we have an appellate authority in case there is any aggrieved, if you aggrieved with any kind of order which your institute has made. So as I told you, there are certain important things. Who can be a complainant? A complainant can be the user of the audit reports, the user of the certificates. For example, the bank, financial institution for the audits, projections, other matters. The investigation authorities in case there's some investigation going on. The companies, firm, other entities, the central state government. Anybody can become a complainant, including your clients, including your fellow member. Most importantly, most of the complaints, so out of, like we were saying, that these 2000 cases were pending with the institute, and on the sample, I don't have the exact number there, but on the sample which I have taken, right, say 20, 30, 40 cases which I have studied very closely or I have been dealing very closely with, right, majority of the cases, in majority of the cases, you see, I'll just take a minute, right? Just a minute. Sorry for the interruption. So I was saying that most of the complaint comes from the clients itself. 70-75% of the cases which I have been dealing, majority of the complaints comes from the clients himself, and in very few matters the complaint comes from your fellow members. But if a complaint comes from any regulator, then it becomes a major challenge, and we have limited number of cases, but these cases involve huge amounts. These cases involve huge irregularities and huge impact on the brand of the profession. So I hope it is clear from who all can file the complaints. So we obviously know our existing code of ethics, and the revised talk about 3 volumes. However, we have 4 parts in the revised code of ethics. First, let's go back to what the original concept of code of ethics was. We had part A and part B. Part A talks about the general application of the code. Chapter 1 talks about the general application of the code. Chapter 2 talks about the professional accountants in public practice. Chapter 3 talks about the professional accountants in service. Whereas while we look at part B, then you have chapter 4, 5, 6, 7 talking about you know the Accounting and Auditing Standard Boards, the Chartered Accountants Act 1949, the Council guidelines, right? And what were the self-regulatory measures? I don't want to focus on it. I want to focus on what is the revised structure. So revised structure talks about four parts. Part one talks about which is applicable to all professional accountants, that is complying with the complying with the code, the fundamental principles and the framework. Part two talks about professional accountants who are in business. Part 3 talks about professional accountants who are in public practice, and part 4 talks about the international independence standard from section 400 to section 999. We will understand this structure, but before understanding, let's go back to the fundamental principles of audit, fundamental principles which we of this code of ethics, and these were those five fundamental principles which we have been constantly listening about. But why are we discussing this? Because we want to discuss two important things. One, what are the challenges to comply to these fundamental principles? What kind of threats are there? So I want to discuss those threats, and how do we limit those threats, how we control those threats, how we bring down to an acceptable level, so that there is no risk which is being carried out. So while we talk about fundamental principles, we talk about those five principles, and based on these five principles we will talk about the threats also. These five principles are the integrity, objectivity, professional competence and due care, confidentiality, and professional behavior. I am sure, being CS, I don't want to detail all those principles theoretically, but I want to come on, all these five principles, what are the major threats, and I want to detail those major threats so that we are able to comply to these fundamental principles, right? So these are those five major fundamental principle. The first principle was the self-interest, five threats to the fundamental principles. The first threat was the self-interest threats. So let's have example of self-interest threat. A self-interest threat itself indicates that, on the uh, in our case, if we are invested in a particular company, is a clear example of a self-interest threat. So if your family members hold any kind of shares, right, in your client, then it's a clear example of a self-interest threat. The performance of client, the growth of the client, is if your interest is associated with the growth or the performance of the client, then that comes under the category of a self-interest threat. Another example I can give you of a self-interest threat is while you have limited clients, and that happens generally in the beginning of the practice while we start young. That kind of thing happens, we have two or three or four major clients. If majority of a revenue is coming from a particular client, then it is again a example of a self-interest threat only, right? So all these, why I'm telling you, because you have to now start thinking about all these issues which are in your practice. So if you are majorly dependent on one client, if majority of the revenue comes from one client, then obviously there's a self-interest threat, and obviously institute does not takes it you know institute takes it very seriously in these days. And this is why, while we talk about the new code of ethics, you see that restriction of 40% going down to 15%. But make sure that while you set up a practice, you have these there is no huge remuneration coming from a single client, and if it is coming, then you are surely disclosing it to those who are charged with governance. The second threat is the self-review threat, and as the name indicates, wherein wherein you see a threat is arising from while an external auditor audits your financial statements, or colleague audits your financial statements. In such kind of a situation, as a professional, you are scared of any kind of irregularities, or there are any irregularities which are highlighted by your successor auditor, these threats comes under the example of the self-review threat. The third threat is an advocacy threat. And while we discuss about an advocacy threat, it is clear that while the change of restriction of taxation services, right, to audit client is a clear example of an advocacy threat. That is where you are offering multidisciplinary services to a client. You are fighting a litigation for him also. Besides, you are doing an audit for that particular client. In that cases, these kinds of threats arise. The fourth threat is a familiarity threat, and this threat eventually comes while you have a long lasting clients, you do multiple tasks for him, you hold a strong relationship, you become too familiar with him, you become so familiar that you enter into his shoes. And that is why I cautioned all the members, such kind of a situation wherein we start entering into the shoes of the client, that is the biggest threat for a chartered accountant. So as professionals, we are not expected to enter into their shoes. As professionals, we are expected to maintain that independence. To make sure that we are independent enough, we have to review the familiarity threat. We can't enter into our client shoes. That would be the idea of a familiarity threat. An example, couple of things which we can discuss on familiarity threats. So the idea of rotation of auditors comes from this threat only, and that is why with the New Companies Act, at least for the larger listed entities, the principle of rotation comes into picture. Whereas the other thing which I can tell you, and which I have been seeing, if you are a chartered accountant for a small organization, if you are auditing for a small organization, a private limited company uh, only, in that case, not even a private limited company, any kind of an entity which does not have too much of a turnover, sometimes the client expects you to, do the bookkeeping also, do the compliances also, make sure that his TDS is also deposited, make sure his GST is also deposited on time, uh, make sure. And sometimes as chartered accountants, what we do is that we audit also, and we start doing their bookkeeping also. That's a basic, most appropriate example of a familiarity threat. And while if there is a dispute which arises between you and your client, the client straight away have started moving to the institute that I was advised wrongly by my chartered accountant, he was taking care of all these matters. There's a notice which he receives from department. In turn, he moves to institute, making you guilty that you have not been taking care of his accounts properly. So we have to make that distinguishment wherein, the burden of compliances, the burden of bookkeeping uh, is basically is on the client, and it should not be on the auditor who has been auditing the accounts. And that is the biggest example of familiarity threats. I have seen a lot of cases where institute have asked details, from this chartered accountant, wherein from these kind of chartered accountants, wherein they have been uh, even invoicing for bookkeeping and invoicing for auditing have been done in a same invoice. Then how can you say, or how can anybody say that chartered accountant is independent in such a case? So there's a lot of these things needs to be corrected. If you are doing bookkeeping for your clients, if you're handling GST compliance management for your client, make sure that you're not assuming the role of the auditor. And if you are in that auditor's role, so avoid assuming these roles wherein we enter into the foot of the clients. For, I don't know about Bangalore, but for the small cities in which I take this session, a lot of chartered accountants even take their tax money in the bank account of their own firms or own accounts. The small client comes to you and say that I don't have the net banking facility. Can you make my tax payment? I'll transfer to your account. such things are happening so frequently. But when these things happen, your independence comes in question. I am still telling you, there is no prohibition from institute as such to receive any kind of tax amount and deposit to the client. But to justify that you have been auditing independently becomes tough in this kind of a situation. The next is the intimidation threat, and as Shetty Saab was asking this, that whether a gift or a hospitality uh, uh, given by your client, right, or offered by your client should be assumed by a professional, by a chartered accountant or not. So it is an example of an intimidation threat where your client is trying to please you in whatever way. He's trying to please you through that hospitality, through that gift, through that through maybe higher remuneration also. So in all these cases, you realize that there is an intimidation threat. These all threats are definitely increasing your audit risk, can always uh, put up you under a lot of question. So I think I have answered Shetty Saab's question here, whether you can accept gift hospitality. No, you cannot. And this is a clear example of an intimidation threat. While in auditing, we should also take care of our audit teams, specifically while they go on bank audits, while they go on government audits, wherein there is not much capping of out of pocket expenses. I am being very blunt here. In those cases also, it is important to keep a check on such kind of things, that uh, we might claim out of pocket expenses. That is not an issue, but there should not be any undue advantage of client, or uh, undue activities happening. Otherwise, tomorrow if certain uh, dispute arises between you and your client, then your client will say, he's the only chartered accountant, he was taking all kind of facilities. So make sure, make it a rule, make it a thumb rule, I am telling you, that whatever is minimum, we should make sure that we should comply to that kind of practices only. Minimum does not mean, and it should be proportionate to the quality and the kind of services we are offering. While I say the quality and the kind of services, I mean to say, if the remuneration is like 25-30 lakhs, obviously the out of pocket expenses have to be proportionate to it. So, so make sure your remuneration is also taken care while you are claiming such kind of an expense. Otherwise, they can be termed into gift and hospitality services. So importantly, while I hope I was able to explain you these threats, how do we safeguard these threats is important. And to safeguard these threats, we have to, comply to the fundamental principles, act in public interest, right? Now, to safeguard these threats, I'll come point by point and what all changes we can bring in our practice. So, I can tell you my example itself, right? So, a couple of months back, one of my clients called me and he said that we have been penalized for a delay in advance tax deposition for 1.25 lakhs, and this is because of us. So I told him very clearly. The first thing which I did was that I retrieved the copy of the engagement letter which he signed with me. And then I sat with him discussing that as per the engagement letter, I was not supposed to give an opinion on the advance tax. I was only supposed to, audit the accounts which you have presented. Any kind of delay in deposition, I am not accountable unless my engagement letter specifically says so. So all those members who are sitting here, the first thing which I want to advise here to safeguard all these threats is to have a clear engagement letter between you and your client. For it, you obviously do that. Client wants to be very clear about it also. But for the smallest of the client, there has to be an engagement letter, and you should constantly review that engagement letter. Through that engagement letter, you should try to control the quality of the services which you are delivering. So please ask this question to yourself, that if you are catering say 100 clients, 200 clients, 500 clients, out of these 100, 200, 500 clients, how many of your clients you have been formally entered into an arrangement of an or entered with an engagement letter. So that's my first request, that while you visit your office tomorrow, make sure that all kind of understanding between your client and comes on papers through this engagement letter, right? For assurance engagement, right, the management representation letters, the independent the documentation of the independence needs to be taken care, to make sure that there are safeguards to the threats which we were discussing, right? As I told you, we should really check and monitor the revenue which we are receiving from a single client. There has to be a constant check, because that's the biggest self-interest threat in case a substantial revenue comes from a single client, right? Uh, Now, for a firm which has, these are those three, 4 pointers which we discussed. So, first point, as I told you, that please draft engagement letters with almost 100% of the clients. That should be your idea. How close he is, how old he is, how clear your understanding is informally, please formalize it. The second thing which I want to tell you, for multidisciplinary practices, uh, for chartered accountancy firms having multiple partners, right? Uh, and all partners signing engagement for different kind of services, you should create separate reporting lines also. So while you structure your office, I am now, second tip is, you have to structure your office. So make sure that your audit staff has relevant skill uh, for doing a particular assignment. Maybe I sign an engagement letter. I am an expert of an internal audit, but while there was a limitation of staff at my office, I asked my partner to provide me staff for who my partner who works in the direct taxes, to provide his staff for internal audit practice. Now, in that case, obviously, these threats, again, the basic principles of objectivity and everything, then goes into vain. So, make sure that you develop your organization in a structure where an engagement partner and his reporting team are in sync with the kind of assignments we are handling. And if you are able to do that, I am telling you that a lot of you also release a lot of pressure on you, because your team is more skilled. Your team day in, day out use those kind of skills. And as we now we realize this fact, that the profession uh, does not remains anymore as a generic profession. The profession basically is now moving towards specialization. While you specialize, my idea is, let your teams also be specialized in the same, and not barring you to give enough exposure to your audit assistants like a big four. While they enter any arrangement with an article assistant, they just train them in one domain. You train them in multiple domains, but at least your managerial staff should be trained on single domain only in times to come. This is for sure, this is a change which we see. And while we while a client approaches to us, we realize that client is also looking for such kind of specialized activities only. So this is, then there's a timely communication of firms policies and procedures, right? So while we were I did my articleship from SS Kothari Mehta and Company, New Delhi, and we were like 200 250 article assistants 20 years back. and I realized that every Saturday our principal, Mr. Mehta, K.S. Mehta sir, used to have a Saturday class, and sometimes even the presenters were the articles of the office only. So make sure these small little changes, and I'm sure a lot of people might be doing that Saturday class, training to their staff, training on the different tools, training on ACLs, right? While I was telling you that we have become, while we have started auditing remotely, we use a lot of data dumps of the client. We extract a lot of data from our clients, and maybe through SAP, maybe through Oracle, right? And while we extract that kind of data, we do analytics on it through ACL tools. So whether your office have relevant tools or not, that also needs to be now thought about. Whether you have that kind of analytical tools, whether you're using audit command languages, whether your team is trained on it, whether the testing of these ACL tools is done fairly or not, all these small things will make sure that the quality of your audit is not deteriorated, is up to the mark, right? So next is so trainings and technology. That's two things which we talk about, right? Then allocating the responsibility, as I told you about the organizational structure, right? So all these small things comes into place, and there has to be a policy, there has to be a disciplinary mechanism in the office, right? Right, and there have to be these policies needs to be clearly communicated to your staff, whether you are a 4 5 member firm, whether you have 40 50 member firm, whether you have a firm of 400 500 people, this should apply. Majority of these things should start, you should start applying in your offices to make sure that your work environment is safeguarded, right? We'll move on the next slide. The next slide talks about sometimes some kind of different strategies which you can adopt, right? These are specific safeguards, like you may involve or you may associate with any chartered accountant or a professional accountant to review the work which you have done. Now we were discussing under while we were discussing peer review, we were discussing more from the structured point of view. I am here discussing from your own point of view, wherein as a professional, you can hire or take services from a third party, from another friend, from a chartered accountant, who has a specific period or domain to review the work and the audit documentation which you have been carrying out, right? Uh, Second is you have to discuss the ethical issues, right, with the client. While client, as I told you, some clients come and say, you certify our projections, you certify, they ask for certain certification which we are not even allowed to do. So you have to discuss these ethical issues with your clients. Plus you have to discuss these ethical issues while, as I told you, that if I am receiving majority of my fees from one particular client, then I will make sure that uh, I'll make sure that at least I am able to communicate the same to those who are charged with governance, to governance regarding the same, so that nobody can question on my independence, right? Uh, so, and then a policy of rotating the staff also needs to be there, right? So while you build up your teams, make sure you build up in a way that you can start rotating your staff. Uh, a particular audit assistant, a particular audit manager, even a particular engagement partner should not repeat a particular client uh, for many number of years, right? Otherwise, the perspective which uh, there might be a there might be a change which might be required in your perspective. And while if if we look at things from only one point of view, so then obviously there might be certain audit risk which we might escape to address. That is why the rotation is important, not only rotation from one auditor to another auditor, but even the rotation between the staff. That is also very important in terms of making sure that you are safeguarded against the threats. So while you do this threat evaluation, if uh, if you apply those safeguards, you will realize that you are able to reduce the threats to an acceptable level. If the threats are reduced to an acceptable level, right, you can accept the engagement. If you are not, even after applying all those threats, you think that it is not possible to reduce the threats which we discuss, the self-interest threats, the intimidation threats, the self-review threats, advocacy threats, all those threats which we have been discussing. If you are not able to reduce it, then I am telling you, as a professional, there is no harm in even declining an engagement. We have to develop that kind of a practice where it is entirely okay for us to decline a particular engagement in which you see there's a audit risk arising, there's a risk arising, there's a threat arising which you are able to foresee it today. I hope I am able to, you know, clarify what are the threats and how can we overcome those threats. I'll take a minute's break to, get me some water. Please allow me a minute's break.
For the information of members, clause by clause, Union Budget 2022 analysis is going to happen on 11th February, Friday, day after tomorrow. It's a full day program available both on physical and virtual. I request please register for that program. Lot of changes there in the union budget in direct tax, and also indirect tax union budget changes session is going to happen on 17th of February. That is on Thursday, 17th February, indirect tax. 11th February, Friday, day after tomorrow, is going to happen direct tax clause by clause analysis. Please register for that program. Also visit bangaloreici.org on a regular basis for all our future programs.
Thank you so much for allowing me this minute. So while volume one talks about application of conceptual framework of revised code of ethics. So now we are straight away coming on the point of revised code of ethics and what are the changes which this revised code of ethics brings in. What are the changes which are applicable? What are the changes which are yet to be applicable, as we discussed about those three important changes which are yet to be applicable, right? So volume 1 talks about the conceptual framework, and it talks about few small things which I want to cover it here. One is the professional appointment, and as I told you that you have to make sure that you get all your engagement letters done with the client. Also, council has issued the guidelines on KYC of the clients. So whether we are doing the KYC of these clients or not, right, is important. The relevant documentation needs to be done. So institute has gone one step ahead. I am just asking you to maintain an engagement letter. Institute has gone one step ahead to make to let you know what to make sure that you do KYC of your clients also, right? The second thing, while you accept any engagement, this question needs to come to you, whether the engagement can be accepted barring the limits which the Companies Act, which the other enactments put on us, whether then engagement can be accepted, or looking at the threats which we were discussing. So this also needs to be documented, right? The other thing, while we are talking about the appointment of an auditor, is the changes and the communication with the previous auditors. This also needs to be documented. So basically it gives you an idea of documenting 3 4 important things while you begin with a professional engagement. One, the engagement letter. Two, the KYC of your client. Three, a documentation, clearly indicating whether this engagement, on what basis this engagement has been accepted, also needs to be documented strongly. Four, any changes in the any communication from the previous auditor also needs to be documented. I am sure we all know that while we take a statutory or an internal auditor, we need to communicate to the previous auditor regarding the same, right? While we are applying this framework, then if there is a conflict of interest, that also needs to be clearly disclosed for those who are charged with governance, right? We should also discuss about the fees and the other types of remuneration, the fees pertaining to the audit and the quantum of fees which is pertaining to the other uh, other professional services which we are rendering. As we have discussed about the gift and hospitality, needs to be very clear. Any kind of an engagement letter should clearly talk about the out of pocket expenses. This only gives you safeguard only to quantify those out of pocket expenses to the extent possible. I will reiterate it. Kindly look at the quality of the services, kindly look at the quantum of services, kindly look at the quantum of fee, right, which you are receiving from a particular client in proportionate to the out of pocket expenses which we are charging, right? It should also talk about the custody of the client assets, and as we know that you know the client assets are the books of the accounts, and everything are client they are the client assets and belong to clients only. And if you are a custodian of such kind of an asset, then make sure that uh, it should it should clearly lay down in your engagement letter the responsibility with respect to the records which you are holding for your client. So next is, let's go on the changes, and before we go on the detailing of the changes, as I told you, this is applicable from 1st July 2020, barring those 3 important things. I first want to come on those 3 important things before we discuss these changes. The first change comes out to be the NOCLAR, and the NOCLAR talks about non-compliance with other laws and regulations. So these are three. Please pay your attention for next 10 15 minutes, because this is those changes which we were expected to discuss while we are training on revised code of ethics. So the first thing is non-compliance of other laws and regulations. And while we are providing a professional service to a client, or for an employer, a professional accountant may come across an instance of non-compliance with laws and regulation, or suspected no-clar committed or about to be committed by the client or the employer, by those who are charged with the governance, by management or employees of the client or employer, right? So what it says, I'll first tell you the crux. It says if your client is not complying to any rules, and that is why we started with this session. While I was discussing with Chairman Sir, uh, we were discussing this fact only, that it is very tricky for institute to enforce this kind of a law. But as I told you that the International Ethical Standard Board, or as per the international boards, right, these practices have been following constantly. So in this case, where your client for which you are signing an audit report, for you are providing an assurance service, is not complying to any law, right? which has any direct effect on determination of material amount and disclosure, or which is, which is a non-compliance of entities fundamentals to entities business, right? Or or is avoiding any kind of material penalties. In all those three, four scenarios where a client is not complying to any kind of a law, as a statutory auditor, you have to report this. Now, while you do that, right, I can give you examples of this. Like one example which I can give you is like, uh, if you have a builder client, right, and as per RERA or as per the local authority, he was expected to build say 8 floors, 9 floors, 8 floors, and say he built 10 floors. Now in this case, he has not complied to the local authority law. The institute or the new code of ethics expect you to report the same also. So what everything comes under no clar. What is not coming under no clar is if anything is clearly inconsequential or insignificant, right? Uh, any personal misconduct which is unrelated to business activities, that means any kind of business activities, what your client is doing, right? Uh, and if there is any kind of a non-compliance, you have to report it, right? Non-compliance other than by a client or employer. If your client has not directly done any non-compliance, then it is fine. Now, two, three important things, right, which we have to look through this slide. One, this is a clause which is applicable for a chartered accountant who is in practice also, and for a chartered accountant who is an employee also. That means as CAs, even if you are an employee of a particular organization, right, you are expected uh, to, report on all these issues which your employer is doing. So for those who are in service, this clause is also applicable to them. To any kind of law, other law, as the name suggests, and this other law includes all kind of law which are applicable to your business, be it a labor law, be it a RERA, be it any law which is not even directly associated to my practice. That law, the non-compliance of such kind of law has to be reported. Now, question is, what kind of what kind of laws we are talking about. I have given you some example. Any fraud, any money laundering, any criminal activities, uh, any security markets and trading or insiders trading or such kind of thing, right? Any non-compliance of environmental laws, right? As there are pollution control boards which are very active, and almost all your clients receive some kind of notices from pollution control boards, right? Or the environment impact and assessment cells, right? Which talks about public health and safety, Data Protection Act, right? All these are small examples where your client might remain to be non-compliant, and if he is non-compliant, then as chartered accountant, as auditors of that particular client, you have to really deal with that, and you have to. So so as of now, we should understand what is the applicability of NOCLAR. Right. For now, as of now, I told you this is not yet applicable. Institute intends to make it applicable. The institute is trying since long, but there are a lot of representations from members only, that's why I told you, which makes it very tricky to enforce it straight away. And how do we, as CAs, how do we get to know that all this kind of minutest information? Because while we discussed audit in beginning, we always talked about the primary and the secondary opinions which an auditor needs to give. Now this, we are going one step, not one step, many steps ahead of what a chartered accountant is expected to do, and that is why it makes institute to mandate it uh, more difficult. So as of now, uh, the application of NOCLAR has been on ठीक है, is a limited application, but for it is applicable as an employee also, it is applicable as a practicing chartered accountant also, but it is applicable only on listed entities, right, on audit assignments, and in case a professional accountant is in service, so then it is applicable to the employees of listed entities only. So primarily one thing which we can clearly understand from this, that to begin with, it has a limited applicability once it will be even applicable, and the applicability will be limited to a listed entity and with respect to the audit engagements also. So, so if you see 10, 15, 20 years down the line, you might also see that, unlisted entities coming in, non-audit engagements also, and chartered accountants have to play a very vital role in making sure that his client, his employer, is compliant to all the laws which are applicable on his business. So that's the first major change. The second thing is the tax service to audit clients. Uh, I'll reiterate it. The code of ethics is enforced from 1st July 2020, barring three things I am discussing. Because changes are inevitable, they will be applicable in times to come. And then what are the other changes? We will definitely discuss that. Right. So next is the taxation services to the audit client. And while we look at the taxation service to audit clients, right, uh, previously assignment which in which you were doing, in which the provision of formal tax opinions, right, we were giving opinions to the clients, resolving their tax disputes. Previously it was not considered as any kind of a threat, right, but with this new code of ethics, let us understand what is a threat and what is not a threat. So while we look at this, right, you can very well see, uh, I have listed what kind of tax services which we provide. So as I told you that while you provide a taxation service to the client, it brings the self-advocacy or self-review or advocacy threats. Tax return preparation is not a threat in this case, right? Usually, if you prepare a tax return for any of your client, it will not, any of your audit client, it will not be termed as any kind of, you know, it will not arise any kind of a threat. However, while you are doing tax calculations for your client, like I was giving you that example wherein a client came to me and said that he has been, defaulting his advance tax, and this might have happened because of my negligence or chartered accountant's negligence. So in that case, the engagement has to be very clear. One, two, if even if you are doing it, even if you mention in that it's written, right? The tax calculation. The third thing is a process. Then is which involves valuation. Here also that which seen. Last is the assistance in the resolution of tax disputes. Again, you see a self-review or an advocacy threat which we were discussing. So, with this new code of ethics for all your audit clients, when you sign a fresh engagement letter, please don't talk about providing any kind of tax advisory services. Rather, it's just not about, through an engagement letter, through any mode, to make sure that we are independent enough, the taxation services to the audit clients will be prohibited henceforth once this also is applicable. The third major change was the fee, and if you recall the previous code of ethics, then we recall our 40% or 40% clause from a particular client. There is a change in this, right? And this change talks about that where for 2 consecutive years, total gross annual professional fee from an audit client and its related entities. I have bold these 2 lines. One, the audit client, the other is the related entities, right? Represent more than 15% of total fees. So there is no debarment as such. The firm shall disclose to those who are charged with governance, right? No such ceiling on total fees. Now, two important notes here, right? Where if the fees is not exceeding rupees 5 lakh, there is no such problem. If the fees exceeds rupees 5 lakh, then you have to see the turnover of 2 consecutive years and make sure that it is less than 15% of the professional receipts. The second thing is that this does not brings any ceiling limit on audit of from a government company, a public bank, public undertaking, and your bank audit fees, audits from public financial institutions, any government appointments. This independence or this fee cap is not applicable to these kind of entities, right? So couple of things from here to take away is that make sure that you constantly, as I told you while we were discussing how do we limit our threats, we were discussing that we need to constantly monitor the remuneration which we are receiving from a particular client, so that while this clause is applicable, we don't land up in any kind of a trouble. In this case, my point is very clear that in 2 consecutive years, your professional fee from a particular client, right, should not be more than 15%. If it is there, please disclose it to those who are charged with governance. Previously, while this clause was of 40%, you recall there was an absolute restriction, right? So now these were those 3 changes which we were talking about, main crux of the revised code of ethics. But what all other changes are there? Now we can review it this from we can view it this from this slide. Earlier, you see there was no provision of no clerk. Earlier, there was no prohibition of the taxation services. Now there's a restriction on the taxation services. Previously, the previous code of ethics do not talk about the management responsibilities to the audit clients, right? But here the engagement letter itself will specify that, right? The important part, the recommendatory 40% restriction on fees from an audit client, which is now 15% restriction on fees from a single client only if it is consecutively for 2 years. And the duty of an auditor is to communicate with those who are charged with governance, right? Since this part 4 comes upon the international independent standard, so they talk about the duty of an accountant in case of unintentional breach of independence standard, right, which was not there. uh, the independence sections recharacterized as international independence standard. So while three important things besides that, the word professional accountant, that you will, in years to come, you will see professional accountant being used more than chartered accountants, because the international ethical standard board terms ourselves to be professional accountants only. Then two, three more things. The mandatoriness or the mandate which this ethics bring. So wherever they were using should, may, recommending, they have tried to mandate it, and you will see that the use of shall uh, and should, right? Use of shall has been more instead of using a recommendatory kind of things. So these were those basic changes which we discussed. Now these were those four schedules which we were supposed to discuss, right? First schedule and second schedule, four parts of the first schedule, and professional misconduct in relation to chartered accountants in practicing. So all these points were previously also there. As of now, they are also there, where you are allowing a non-CA to practice in his name, where sharing fees or profits with a non-CA. I'll request all the participants in case they have any questions, because these are I have discussed the changes, I have discussed the framework. We are on the last part of it, which is already been with studied by you, but I'll more focus on the recent changes, right? These clause I hope everybody is clear about, but still, if something is more relevant, I'll pick that particular point, looking at the paucity of the time. Important is that if you have any questions in relation to those three clauses which we discuss, in relation to any kind of disciplinary mechanism, uh, in relation to peer review or something like that, I am more than happy to take these questions. So while in meantime, I am discussing the parts of the schedule and the recent changes. So while we were discussing professional misconduct in relation to chartered accountants in practice, we realize, we again reiterate that any allowing of non-CA to practice in his name is a professional misconduct in relation to chartered accountant in practice. Sharing of fees or profits with non-CA, right? Receiving, but there are barring certain exceptions, like we were discussing about the uh, registered valuer thing, right? In that case, it is allowed. So, receiving share in profits from non-CAs, entering into partnership with persons other than CAs in practice, right? I will clearly reiterate on clause 5, 6, and 7, where I think the younger chartered accountants who are coming up have been, really hard pressing themselves uh, in acquiring clients or soliciting clients. These are those three clauses which you should go back and read it again. And I am still a believer that your practice growth will not come with any kind of marketing effort. They will come with your professional competence. You can ask your seniors, you can discuss with them. It will only and only come with the with specialization, with professional competence, with continuous CP, with continuous enhancing the quality of the services to the clients. That is why I am going back, that there are a lot of non permitted means which institute has been really focusing on. These means needs to be thoroughly studied uh, while you set up your practices. So securing professional work business by any non-permitted means, or solicitation of professional work, any roving queries, any advertisements, um, any kind of visiting card issues. There are a lot of things, lot of marketing material which we use, naming your clients, naming your designations on your visiting cards, uh, is in which you are a member of an honorary body. So all these things are absolutely non-permitted. I can tell you that even as a managing committee members, a lot of people use their visiting cards, wherein on the front side they have their firm's name, on the back side they mention the post they hold. These all are prohibited means while you go into details, right? So make sure that the visiting cards look simple, talks about your offerings, does not talks about your offerings, right? Then the clause 8 talks about non-communication with the previous auditor. Uh, Clause 9 talks about accepting audit appointments without ascertaining company law compliance, wherein there was a cap and everything, right? there has to be no contingency fees, right? Uh, as I told you that a lot of CAs who were, in 2020, while we look 10, 15, 20 years back, I saw there were some CAs who were in service also, and those CAs, offered their COP to some firms. Now, while this new MEF has come up, I am sure we know that these things are not possible, and even if your income tax return is filed under any wrong section, then there are a lot of queries which are coming up from institute. So make sure that now we have only active partners in the firm, and if there is any reconstitution which is required, that reconstitution needs to be done. Allowing any other persons to sign on your behalf, right? Then there is part two of the first schedule, right? Where sharing emoluments or accepting a part of fees from professional engaged by employer company. This is applicable to CAs who are in service, right? Uh, Part 3 talks about in general professional misconduct in general, right? Uh, Wherein not being a fellow of the institute, act as a fellow of the institute. One, two, he does not supply the information which is being asked by the council. So whenever you receive any kind of notice from the institute, the first thing is that you need to reply to this appropriately. Otherwise, the clause in which you are originally guilty, say you are guilty in some kind of a clause, or you have been taken into a radar for some kind of a misconduct. The problem is that this is another section which becomes applicable after the original section which you may or you might not have violated, but which you are charged of. So that is why a lot of people refrain to respond to the institute, making sure that they become then guilty in clause 2, part 3 of the first schedule also. So that invites another kind of trouble. Clause 3 talks about while inviting professional work from another chartered accountant or while responding to tenders or inquiries, right? Uh, if any kind of information is being given false, knowingly that it is false, then you become guilty of part 3 of first schedule. Part 4, as I told you, that other misconduct, I gave you a very basic example of a professional accountant, traveling. This example comes like 70, 80 years back. So, any kind of an activity which brings disrepute to the profession, which is in the nature of criminal or a civil offense, uh, makes you guilty of part 4 of the first schedule, right? Then you have the second schedule. Second schedule talks about professional misconduct to chartered accountants in practice, talks about disclosure of information with the consent of client, submitting the report without verification of the financial statements, certifying estimated earnings, audit of a concern in which they have their substantial interest. Auditor is unable to disclose the material facts, was grossly negligent, was unable to report to material misstatement, was not able to obtain sufficient information. All these things, right, uh, brings you makes you guilty under the part 1 of the second schedule, right? And then the general thing, right? So basically, I think we on this note, I can tell you that let's quickly come on the recent and important announcements, rather than going through those schedules one by one. But important announcements uh, are something which will make this more relevant. And this, by end of this, if you have any queries, you can put that queries in chat box. So one, a CA firm should register itself on Udyog Aadhaar, number one, and there is no problem in that, right? There is no prohibition for an internal auditor of a company to acquire or purchase share of the said company. Uh, it is not permissible for a member to use WhatsApp to send message to make people aware about his practice and mention his service provided therein. So this is not permissible that, as chartered accountant, if you are using bulk messaging services, if you're using bulk WhatsApp, or even if the message gives a sense that you are trying to make people aware about the kind of the practice or service, then that becomes problem. Then wherein a chartered accountant is being a director simpliciter, right? Cannot sign ROC forms of the company as it is uh, a direct conflict of role. So make sure that if you are a non-executive director or an independent director of the company, please don't sign any kind of financials, any kind of forms, knowingly that you will be guilty under this act also. Right. A chartered accountant in practice can be an authorized representative of a foreign company, subject to that he is not an auditor of the said company. So all these things comes from the recent announcement or case laws. Right. Um, Two or more CAs in practice collectively can have joint training session for their clients on GST and share the fees collected from the clients thereof, right? So you can have those awareness programs to your clients on commercial basis. However, I'll repeat that you can't do a program wherein you are inviting people to attend such kind of seminars. So say if you are being invited by CII FICI to deliver a session on GST, you can go and deliver. But you suo moto cannot hold any session for those people who are not your clients. So the only people you can hold your session is your clients itself. Then is uh, CAs in practice can provide services through kiosk only if the services provided are professional activities of a practicing chartered accountant and which are permitted, right? Um, while you are a non-executive director in a company, right, or he's a in a firm, he's a partner, should not accept any kind of an appointment as a statutory auditor of a company which is a joint venture of the original company. So the applicability is clear in this particular case. Obviously, while you are a non-executive director, you know that there's a conflicting interest, and your firm or partner of your firm uh, cannot accept an appointment as a statutory auditor. What you can't also do is that, any holding subsidiary of that company you can't appoint. Any joint venture in which you do not have direct interest also will not be considered, right? CA in practice may act as a research equity advisor, but he cannot publish retail report as it would amount to other business or occupation, right? He can act, but he cannot publish a retail report, right? CAs who are member to a trust cannot be the auditor of such a trust, right? CA in practice may engage himself as registration authority for obtaining digital certificates for clients. This is for small practitioners, right? CS can hold the credit card of a bank when he is also the auditor of the bank, provided the outstanding balances of the card does not exceed 10,000 beyond the prescribed credit limit on the card given to them. So it is clear, earlier it was interpreted that even if there's an outstanding amount, so that outstanding has to be more than the outstanding date. So if you are a statutory branch auditor of SBI and you hold SBI card, right, there is no prohibition as such, but make sure that you don't hold beyond the prescribed credit limit, right? Um, Sees in practice is not permitted to accept audit assignment of a bank in case he has taken even a loan against FD held by him. So if you have taken a loan and even if it is a fixed deposit, so in today's era, banks provide loans against fixed deposit where they charge 1 or 0.75% interest above the FD rate. In that case, the plea of chartered accountant is that it is not kind of any loan because I have already secured it by way of my FD and bank has disbursed me 90 or 80% of the loan. However, institute still terms it to be a conflict of interest, right? And disallows you to take that kind of an engagement, right? We know that the client cannot exercise any lien on the client documents or for even in case of non-payment of fees. So as I told you with the visiting card things, I have told you that printing your vision, values, any kind of designations, right? Any kind of agencies which uh, previously chartered accountants used to take, we need to avoid that kind of arrangement also, right? Uh, but a member in practice can be a settler to a trust. Member is in practice can be engaged in coaching activities, but is advised to abstain from advertising their association with coaching teaching activities through hoardings, posters, banners, or by any other means. Right. KYC norms are mandatory. We have discussed this. The member firm can conduct training through seminars, but for their existing clients, as I discussed this, right? But for a proposed client, you can't do that, right? Uh, a CA cannot mention himself as a GST consultant. A member can share GST update mentioning himself as CA with individual name, provided the communication is limited to providing updates. Right. I'll repeat it that mentioning of firm name is not allowed. Lot of people actually mention their entire firm's name, right, while they communicate any kind of updates, right? Uh, since use of LinkedIn, use of social media platforms have become very it has been happening since long. So obviously you can publish your testimonials or appreciation clients, but with regard to not audit and assurance services, but with regard to the training and development which you have been doing, right? GST training can be provided to any existing clients. In case of non-clients, training can be provided only if the member is invited to provide such kind of a training. So, wherein a company has approached you, a mediator has approached you to provide, CIFEK has approached you to provide that training, you can provide that training. But suo moto, make sure that you can't do it and get and gather people as prospective clients in form of training sessions. This is absolute prohibitions. So with respect to the clauses, with respect to the disciplinary mechanism, with respect to the recent changes, uh, with respect to the quality review boards, I have discussed all those parameters to best of my knowledge. Thank you so much for patiently listening. I am still awaiting in case you have any queries. You can mail those queries to Lata ma'am or Shetty sir. They can forward those queries. I can take it afterwards also. If you still feel that, at times while Shetty sir, we take a session on code of ethics, members do not ask a lot of questions. And after the session is concluded, I usually receive 2 or 3 phone calls. So please feel very free. I am more than happy to help Bangalore branch in whatever way I can. I hope I was able to add certain value in with respect to the code of ethics, and is able to, the idea of having this ethics, while Shetty Saab said that I am very passionate about this topic, and it is about inspiring all fellow members to actually come on same page and make sure that the best, we can bring the best image out of our profession. This will only help us to grow our practices also, our profession also. So there is no other way I see. The only way is that we have to now start doing practice in more structured way, in more formal way, making sure that code of ethics is in our heads. Whatever changes are happening, we account for, and believing that all our practice will only and only grow through our professional competence, and nothing else will help us to grow ourselves as professionals. Thank you, Bangalore. Thank you, Shetty Saab. Thank you, all others who have been staying there for 2 hours. Thank you so much for your patience listening.
Yes, I agree 100%. Professional expertise and the following all the code of ethics definitely makes us best professionals. Definitely, it takes the institute flag much higher. These are the obligations of all the chartered accountants, whether we are in practice or in industry. Thank you very much. We had a fantastic session of 2 hours. So on behalf of Bangalore branch and on behalf of all the participants here, our wholehearted thanks to Ankit Maheswari. CA Ankit Maheswari, thank you
Thank
very
you, sir.
much.
Thank you.
Members, you are the reason for this program. Your overwhelming response for the program. Thank you very much. Someone asked whether the recorded version is uploaded in the website. Yes, it is going to be uploaded in a couple of days' time. Please look for that. Thank you very much. Happy
Thank you. Thank you so
evening.
much.
Thank you. See you all.